Hello, everyone, and welcome to this edition of Investing and Trading Live. My name is Josh Lopez. Today is Monday, September 25th, first day of the trading week. Monday morning, it is currently 9:40 Central Time. Market's been open for about just under an hour, and markets have gapped lower again. So we're showing some weakness in the financial markets, especially in the major indexes, the S&P 500. But don't be too so sure. The S&P 500 does have a little demand zone that it's at right now, and looks like it is respecting it just ever so slightly. We'll see what happens here, but the markets are weak on a daily demand or on a daily chart. We have kind of started a new downtrend. So that being said, that's what we're going to cover here today on Investing and Trading Live. Make sure to smash the subscribe button or like button. Send in a comment. It's nice on Spotify on the podcast. You can put a comment in there. It sends me an email. If you like or dislike the show, let us know, and we'll see how we can improve it if you don't, and we'll continue to do what we do if you do. That being said, there's risk in trading and investing. You can and might lose money at one point in your life. This is for strictly entertainment purposes only, mainly mine, but hopefully you find it entertaining as well. That being said, getting the S&P 500. Currently at 429.87. Coming into that demand zone that we've been talking about for a little while now. And we have a couple things going for us. We have the percent Bollinger Band is negative. So, kind of think of this, the markets as a rubber band. And I like to use this as not an indicator, but as a what have you been doing for me now, and what have you been doing for me lately, and what could you do here in the future? Then go look at your supply and demand zones if there's any opportunities. So the market is like a rubber band. It's going to always go back to the mean or the average. And we are low on this, which means I'm expecting, we'll say, a bounce back to the mean. So we'll see what happens here. But it is at a demand zone as well. So there's some potential call options that might be some opportunities for those of you that do options. This is not a recommendation, but just go check it out and see if there's something there that you like. That is the S&P 500 SPY ETF exchange traded fund. Dow Jones, this one also has gapped lower and is actually weaker than the S&P 500. We are coming near a pivot, so I don't really see any good demand here, but it is weaker of the two. Currently down 0.36%, 338.36 as we speak, down over 1%. So the Dow Jones is a little bit weaker. The Qs, the NASDAQ, is also gapped lower, but this one the stronger out of the, S&Ps and the Qs are about the same as far as a percentage point, within 0.1%, actually 0.01% of a loss on the day, actually even right now as we speak. So that being said, this one has shown a little bit of strength here after the open, though. Market opened up low and a little bit of strength as it opened. Currently at 357.5. IWM. This is the Russell. Same thing. This one actually gapped a much lower, but not as bad on the day. It's actually showed a little more strength on all four here. It's the strongest of the four after the open, but yet still gapping lower on the day. 176.54 as we speak. Now, these markets are weak. The Russell has now broke that daily, somewhat of a choppy. We'll call it sideways still, but it has lower lows now. The NASDAQ, not quite in that downtrend. We have a lower high, but we have not broke that pivot at about 354.60. So it is not currently in a downtrend yet. The Dow, this one's a little more choppy. I mean, this one technically has higher or lower highs and lower lows, but we are near a pivotal point here. So this one here is kind of a wait and see. S&P 500 has shown a downtrend. So that's the leader of the pack on the way down. No other major notables with ETFs other than silver, down about 1.7%. This demand zone that is respected 3 times, I don't expect that to hold again. My philosophy is more times it hits it, the weaker it's going to get. So this one here, down 1.7%, could continue to break this on the downside, which, if we're talking correlations here, if the market goes up, silver historically is correlated somewhat, I would say. Not as much lately, but if that odds enhancer is going to repertoire, there you go. There you have it. USO is also down 0.86%, so oil is slowing down. That's your ETFs. Let's get into gold and silver spot price. Gold spot, still in that short downtrend. We're still right in the middle of the major supply and demand zones on the daily chart. Currently at $1,916. Excuse me. $1,917.06 after the cough. Down 0.4% of the day. Silver, $23.11 on the spot price. So gold in between the supply and demand zones. Silver is still kind of doing that same thing, yet above a demand a little bit lower than what we had been talking about. So we have demand lower on the spot price. So Bitcoin has shown some strength, but yet the last several days it's been down again. Currently at 26,167 even. Right now, down about 0.5%, and HNT actually up on the day, $1.47 and some change, which is up 1.48% on the day. All right, let's get into our stocks. There was a couple stocks that I mentioned in the title. We already did the S&P 500, but Target is currently at $111.06. I've been mentioning for quite some time, I do like the area down around 107 to 101. Volatility is creeping up just ever so slightly. So, Target, let's get on this other platform here. It's down 1.3% on the day. I'm liking this actually. On this chart, I have it marked out. It is in the demand zone we've been waiting for, so I will go and analyze this a little bit later. And I've been kind of waiting for this. So this is basically down about almost 60% from the highs. 60% discount on Target. Now, this is not saying to just go out there and buy Target just because. You got to have a reason for buying or selling anything. So be very careful with Target. This is a falling knife. This could continue to go down. But if you do like Target long term, might be a potential opportunity for you. So I'm going to go check this out actually a little bit later. Since we're talking about it, let's just see if since the volatility is spiking up just a little bit, if there's any premium on it right now. I highly doubt it. But we're going to look anyway since we're live here. 32 days. The 105s are giving you over 1%. So 105s is in that zone. So about another $5, which would be, as my Canadian friends would say, about another 11%. No, not 11% drop. Probably a 4% drop. 5% drop. So for those of you that are looking, it might be an opportunity to buy some calls or sell some puts and get paid for owning something that you wanted to own anyways. But, excuse me, there is risk on both trades though, so beware. That is Target. Let's see, Salesforce down about 1% on the day, nearing that demand zone that it bounced off already at the $200 mark. Almost 200 to the cent it bounced off of on. So continue to monitor that. And let's see, a couple more TKO. So TKO is WWE stock, really tanking after a little bit here the last couple of weeks, down 28% from the highs. Not looking very good for WWE and UFC. Netflix is up today. American Airlines, this is a stock that we looked at the other day that was showing some good premium, but has earnings coming up here. Maybe it wasn't American Airlines. Well, this might be an opportunity. But there's no major demand zones. It is in a demand that's already tested twice. So this could continue to go down, although it is low on the percent Bollinger Bands. I do like that aspect of it, but the real estate ETF is also tanking. All right. S&P 500 still at 429.76 on the day. Alrighty then. American Express is down. Carvana is down 3%. This one here, very volatile, showing a big gain here in 2023, but starting to show some weakness here, bouncing off some supply zones twice now. Actually, twice this year. Snapchat down to 1.32%. Nvidia up almost 1%. And BHG continuing to dive. This is a dead stock. But Nvidia up 1%. So that's looking pretty good. So that's your market update for Monday morning. Monday today is the 25th. We'll do another show tomorrow. And I'll look at some options opportunities. There might be some opportunities here for you options traders and investors. So definitely check your options chain to see if you're buying calls, selling puts, or whatever that you're looking to do, or buying puts or selling calls, whatever your strategy is, and stick with that strategy and stick with your plan. And as always, collect your profits when they're given to you and protect your losses, keeping them small. Until next time, retire young, my friends.